Hello everyone, my name is Mohit Anwari. You may be hearing that tech sector stocks are down by 60-70%. All the big tech companies are laying off employees. The tech bubble has burst. There's no more growth left in tech sector companies right now. And this is the kind of commentary that you may be hearing across right now. But is it really true? Let's take a deeper dive into this and see if this notion is correct or not. All right, let's analyze IT sector stocks. So what we're going to do is we're going to talk about fundamental analysis for Nifty IT, which is the index for IT sector stocks in India. And then we're going to do a technical analysis of it. And then at the end, I'll tell you if I am going to be buying tech sector companies right now or not. All right, let's take a deeper dive. All right, let's start with fundamental analysis, right? So what do these companies do, right? In India, majority of Nifty IT is built by TCS, Infosys, Wipro, HCL, L&T Infotech, etc., and such kind of companies, right? All these companies are majorly into services sector, right? 50% of their revenue comes from services and the remaining from software, hardware, and business process management. If you see this graph, the breakup shows you that over 50% of revenue comes from services, right? So services become the key outsourcing or the key product for the IT sector companies. If you look at the profits, right, there are two ways of increasing profits for a company. One is either it can increase the revenue or it can reduce cost, right? If you look at revenue, majority of the revenue comes from Americas region. If you see this graph, this is a graph for top 4 companies of Indian IT sector, which is TCS, Infosys, Wipro, and HCL. And you can see that majority contribution of their revenue comes from America region, secondly from Europe, and the third is the minimal portion of it is from rest of the world. If an IT sector is dependent on America and Europe region so much, both of these countries are facing a lot of headwinds. The cost of capital in these countries is increasing substantially from last year. So what will happen is the customers, the other companies which these IT companies sell to their customers, might have a lot of difficulties in raising money from banks, and thereby they may not want to undergo all these digital transformation kind of projects, right? But that if let's see if this is actually true, right? According to a report by BNP Paribas, the revenue market share for Indian IT companies increased in Q2 FY23 in a seasonally strong quarter to 35% of global market share. This basically means that the revenue market share for Indian IT companies has increased substantially to 35% market share globally, right? Why do you think this could be happening, right? I can think of one reason why this could be happening is because in the West, cost of capital has increased, but the growth focus is still there, right? The companies there still want to grow. So how do they grow without spending much amount of money? So there may be more potential outsourcing opportunities to Indian IT companies and do this at an inexpensive or a cheaper cost than what they would have purchased it otherwise, right? So I think that there may be more business coming in for Indian IT companies going forward, and that's the kind of commentary even all these top tech IT companies are saying. If you see this commentary from Mr. Rajesh Gopinathan, the CEO of TCS, even he mentions that despite growing economic concerns and slowdown, they haven't seen any change in their pipeline, right? The spending is good from their customers, there's good demand from the market, and they even go as far as to say that their customers have told them that even if business outlook changes over the next few months, technology is not the sector where they're going to be impacted as much, right? Even after saying this, they do caution that there is a macro impact right now. There is headwinds in the US and European markets. All right. So if this is the case, why did Indian IT companies fall so much, right? So for this, you need to analyze what the stock prices or what was the valuation when it started falling versus what is the valuation right now, right? If you look at the valuation and if you see this graph here, you can see that the earning per share is growing right now, right? And the price to equity of companies, they were trading at close to 37, 38 as a sector, as compared to a historical average of 20 to 22, right? That meant that the companies were getting a valuation which was double of what they were getting earlier. But is this really true, right? Did the growth actually happen, or was the growth actually expected to double in the coming years for this to happen? So if you see, this is for TCS basically, but you can see that the growth has not doubled from the past years, right? In the newer years of 2021 and 2022, right? The growth has not doubled. So the valuations, I think, were fairly overvalued. And this is just a correction that is happening. At this point, the sector is trading at a price to equity of 25 to 26, which I think is a fair valuation for Indian IT companies, considering the growth that is expected to have. So if this falls further, I would consider buying more of tech sector companies right now. So this is the fundamental analysis of Nifty IT. Let's look at technical, right? If you see this graph, you can currently Nifty IT is trading at 30,300, right? And this is a resistance point for the sector, right? If it goes beyond this, it'll be a good profit opportunity for us to make if this breakout happens. But if not, it may correct to softer support levels of 30,000, 29,000, and then 27,000. Okay, so I think I would be looking out for this Nifty IT sector and seeing if this breakout actually happens. If this actually happens, I'm gonna buy, right? Even if it goes down, I'm gonna consider buying more. But at this point, I'm gonna wait and see what happens. So that's my analysis for tech sector stocks for India. Right, thank you so much for watching. Please like, share, and comment so that I can bring more of such content to you. Thank you so much. Have a good day.